Hello there, welcome to this edition of Global Business Africa. Over the next 30 minutes, we'll make a comprehensive run-through through all the business stories that are happening across the African continent. From Cairo to Johannesburg, Lagos and Nairobi, we've got you covered. Here's what's coming up. Egypt starts a process of raising funds for its mega Suez Canal project. The African Green Revolution Forum ends with more commitments to transform African agriculture. But are they sustainable? And cat farmers in the Kenyan highlands are under pressure given the ban on the stimulant in the UK. Now then, let's start tonight in North Africa, where the National Egyptian Bank, Banque Misr, Banque du Caire and the Suez Canal Bank all have started selling Suez Canal certificates on the 4th of September. President Abdel Fattah el-Sisi's government is seeking to raise billions of dollars for the massive projects. But after 3 years of economic turmoil, are Egyptians interested in investing in it? Yasser Hakim takes a look.
Egyptians went in small numbers for Suez Canal certificates issued in 1,000 branches of the 4 state-owned banks across the country. Banks will extend working hours till 1600 hours GMT daily for Egyptians to go after work.
We must help this project succeed. A project like this will employ thousands, attract foreign investments and bring in hard currency.
The government is selling 5-year bonds with a 12% interest rate, 3% higher than normal bonds, to fund the construction of the new Suez Canal. Exactly a month ago, digging started for a 35-kilometer water channel adjacent to the current canal to increase traffic of ships through the port. Once complete, revenue is expected to double in 2 years and could jump from 5 billion to 24 billion by 2020. But this comes at a high cost, $10 billion that the government doesn't have, hence the certificates.
I am poor and we're living in tough conditions, but I will buy because we must help our country. No one else will.
Not only individuals, but institutions such as political parties, the church and Al-Azhar have all vowed to buy millions of certificates. Some, however, prefer shares.
I was hoping they would sell shares, not certificates. With shares we feel we own the project. It's for us and our children, part of our life. But this is just like any other investment certificate in the bank, but with higher interest rates. I'm not interested.
It's early days to predict whether there will be a success in these certificates. But what the president and the government hope is that Egyptians would buy worth £80 billion of certificates in the next 2 months to fund the new Suez Canal project. Yasser Hakim for CCTV, Cairo.
Whichever way you look at it, 80 billion Egyptian pounds is a ton of money. Let's see exactly where it's going to come from and some more analysis on the project as well from Soufi Aboutaleb. He's the director of the Cabinet's Economic Research Centre. He's live in Cairo. Thank you so much for your time this evening, sir. Why was the decision made to raise the funds needed to build the extra canal only in the domestic market instead of tapping into international debt markets?
Well, I think this is quite reasonable, because we need to offer, the government needs to offer this opportunity first to the Egyptians and then to the foreigners. And I think it's a very good investment for the Egyptians. Also for security reasons. We don't want foreigners to come into our important projects and own a big share, and this way control the outcome of the project.
Indeed. If not all the $10 billion is raised from the domestic market, what is the fallback funding plan for President Abdel Fattah el-Sisi's government?
Well, I think $10 billion is nothing if you look at the Egyptian economy and the money already saved in the banks. We have like more than 1.5 trillion Egyptian pounds in the Egyptian banks. So when you talk about 80 billion or 100 billion Egyptian pounds, this is less than 7% of what is existing in the saving accounts. As for President Sisi, obviously, he is a man of vision, leadership, and he is able to accomplish projects that will help the Egyptian economy and the Egyptian people. Obviously, and you have to remember that this project was known or was well studied since President Sadat. And in the last 30 years, nothing happened due to international pressures on the Egyptian governments not to start this kind of project because of its implications economically and politically.
Indeed. A final question to you, sir. President El-Sisi, of course, has made a fairly strong push into public works in order to revive Egypt's growth. But to what extent are investments in new power plants a part of that plan?
Well, you have to understand that this project, as envisioned, when it is completed, will employ between 2 to 3 million persons or higher. The employment opportunities that high. This represents more than 10% of the Egyptian workforce. And the 3 million employment opportunities in this project will generate 3 million families in the Sinai Peninsula. And imagine 3 million families, that's 15 million human beings of Egyptians living in Sinai Peninsula. They will definitely increase the business opportunities and cultivation, manufacturing, tourism in this area around the Suez Canal, and also foreigners like the Chinese will come in, the Europeans will come in, people from Hong Kong with their expertise in running ports and business. I think this will be, the next 10, 20 years will be very active in this area.
Indeed, we'll have to leave it there for the time being, but thank you very much for your time this evening. That has been Sufi Abutaleb. He's the director of the Cabinet's Economic Research Center. He was live in Cairo. On the other side of the continent, the Korean automotive company Hyundai, or Hyundai, depending on which part of the continent you're from, has established a joint venture company with Imperial Holding, and it's building a commercial vehicle assembly plant in Benoni. It's a city right on the outskirts of Johannesburg. When operating at full tilt, that plant will be building 5,000 commercial vehicles every year. Here's Angelo Coppola with more.
It's a $10 million investment that will see some 60 jobs created when it's running at full production. There are lots of spin-offs as well, up and down the value chain.
And it creates jobs, labour, there's a labour issue that we can tackle, there's parts, all that type of stuff. So it creates employment, and I think that's what we're looking to do.
We would like to see assembly moving to full assembly, complete knockdown kits with strong localization and export competitiveness from using South Africa as a base, especially into the sub-Saharan African market.
The South African government is keen to stay involved in the auto sector. It's been there for a number of years. It's created lots of incentives and packages to entice foreign automakers into the country. It appears that they're taking this now to the next level.
We would like to see stronger localization and supplier development in OEMs, because that's where the strongest multiplier effects, especially employment, is, and therefore we'll be tweaking our automotive production development program support in measures.
Employment stability is key in any investor's mind when they're looking at new places to invest in.
We would like to have as many factors of production, which includes a stable labour environment in a framework of collective bargaining as strong as possible.
I think it's a process how to manage, and you've got to get the expert team to manage that. because you can't be an expert in everything, and we've got experts
on tools over wage increases. But it appears that everything's back on track again, and the sector is taking its place again as one of the major contributors to employment and GDP numbers. And then if there's conversations that are happening around regional integration and those actually move to the next level, it's likely that the auto sector in South Africa will be one of the key drivers. I'm Angelo Coppola for CCTV in Benoni, South Africa.
Let's make a quick run through some of the equity markets here for you very briefly. Fairly mixed bag here. Interesting performance all around. The Egyptian market, the EGX 30, did breach the key 9,500 level earlier on Tuesday. It's still well above that, the 6-year high that it set at that time. The JSE, of course, still on a winning streak, continuing, of course, on the fourth straight day of gains. Capitec was up 9% in trading today after fairly positive profit guidance. Expects first half pre-tax profits of over 20% year on year. The NSE, on the other hand, did break its 9-day gaining streak. It was down by about a tenth. When we come back, we'll be looking at Qatar National Bank. It's making inroads in Africa via EcoBank. And the African Green Revolution Forum ends with more commitments to transform African agriculture. But how sustainable and credible are these commitments? Find out next. Africa is on the move. It's home to 7 of the world's 10 fastest growing economies. We help you make sense of the fast-changing African business landscape. We take you where the business is happening.
Global Business, weekdays at this time on CCTV Africa.
African leaders have been urged to make it easier to move and do business across borders within the African continent.
Africans should be free to move in their continent, to do business, to interact, if we are to grow the levels of investment and trade that will ensure that we are able to create the jobs for our people that we require.
Welcome back. You're watching Global Business Africa. Qatar National Bank, that's the Gulf's largest bank, said on Thursday it is acquiring a 12.5% stake in the Pan-African lender EcoBank Transnational. Now, no value for the transaction has been given in QNB's statement, which said that the stake it would hold would consist of current outstanding ordinary shares and the conversion of QNB's convertible preference shares. Now, the transaction would make QNB the second largest shareholder in EcoBank after South Africa's state-owned Public Investment Corporation. QNB said it wants to become the largest bank in the Middle East and Africa by 2017. The bank's chief financial officer, Ramzi Mari, told Reuters in February it was looking for acquisition targets in Turkey, Morocco and sub-Saharan Africa in order to achieve that goal. Elsewhere, the African Green Revolution Forum ended in the Ethiopian capital, Addis Ababa, with more commitments to transform the continent's agriculture. Critics, however, say that the talks were helpful in emphasizing the needs, but African countries must start implementing these plans if they're to mean anything. Gurum Challa starts our coverage on efforts to revive that sector in What's Hot Tonight.
Less talk and more action is needed, say participants of the AGRF meeting here in Addis. Reason? Because that is the only way Africa can feed itself.
I believe the slogan that should go out from here should be less talk and more action, because the ideas are, I believe, well known. We've been talking over long periods, but we all admit that action has not been equal with the talk.
This fourth African Green Revolution Forum had its goals of creating a more robust dialogue and reach a tangible consensus to transform Africa's agriculture. It looks like that has succeeded at the end.
Everybody seems to have been agreeing and believing in what we were doing in this meeting, in what Africa should be doing, and where Africa should be going.
But still, challenges remain visible and strong. The African agriculture sector needs accountable and committed leadership for the sector to live up to the wishes and dreams of the continent's population. Participants say there is a lot of room for improvement in the agri-policy strategy and practice.
We believe that African leaders need to recommit themselves by putting resources into the agriculture sector. The resources they put in the agriculture sector now are not sufficient. Africa cannot continue to depend on the international community.
Let's make the markets connect. We've said what has been said before. The policies have been set. The actions have been started on, but the markets have not been connected. And those are the most important parts that have to link the rest of the production systems.
The various commitments made by African heads of state and governments is now put to test. Critics say works of poverty eradication and raising living standards should begin now. Creating that important sense of urgency in making agriculture lead African economies beyond the usual subsistence agricultural practice has become vital. One could say this is a make or break time for the agricultural transformation in the African continent. Grumtana, CCTV, Addis Ababa, Ethiopia.
Ever since 2003, African governments have repeatedly committed themselves to improving agricultural output, but they haven't really done much in terms of actually transmitting that commitment into results. Let's find out why and what else we need to do. Ruth Nyambura is the Communications and Advocacy Coordinator at the Africa Biodiversity Network. She's with me in studio right now. ABN, as an organization, tends to be critical of what you describe as purely technological solutions to the problem of agriculture output in Africa. What exactly is the issue here?
Okay, so we have a situation where for the last 25 years, based on structural adjustment programs, the role of states in Africa to provide essential services in agriculture was completely dismantled. So as a result, a private sector was pushed in to fill a vacuum which it couldn't fill. So what we have is a situation where we have close to 223 million Africans who constantly face hunger. But what we have is governments and a private sector that is pushing hybrid seeds, genetically modified foods as a solution to hunger. But the real solution, the real problems to hunger are political and economic. When you go back to issues of infrastructure, we have climate change, which we are facing across the continent. We have access to seeds, access to resources. We don't have comprehensive agrarian reforms across the continent. So it goes back to what exactly will genetically modified foods or hybrid seeds help if you don't have access to land, if you don't have access to credit, and women are completely removed from the process, yet the food we consume in Africa most of it is produced by women.
Are your objections as an organization limited specifically to the use of genetically modified organisms, or do you extend beyond that as well?
We extend beyond genetically modified organisms. Just to give an example, the ASAD report and FAO and the Committee on Food Security currently states that the best way to feed people is through smallholder and family farmers. That's the reality. But what's being pushed through hybrid seeds, through corporate-led large-scale systems of agriculture, is that we're having an elite getting more of the land in Africa, getting more of the resources at the expense of smallholder farmers.
But isn't there a role that the private sector can play? Because at the end of the day, African governments have failed over the last 20+ years to invest in research and development, land reform in terms of access to land law, enabling women to own and inherit land. That hasn't been touched. Access to finance is still a significant problem. And a lot of these issues can be dealt with by the private sector.
Absolutely not. We go back to the issue of why have African governments failed? Going back to structural adjustment programs, the World Bank pushed conditions whereby the private sector was privileged over the public sector. So you can't solve a problem using the same means that the problem was created. So it goes back to what do African governments have to do?
But then that leaves us with a bit of a dilemma, doesn't it? Because if I look, for example, as a Kenyan government, I remember doing stories back in 2009, 2010, where the government at the time said we're going to invest heavily in irrigation programs. 2014, we're still talking about investing in infrastructure, in large-scale irrigation, and nothing has actually come out of it.
Well, first of all, I'm going to say this. Just going back to what's being pushed, green revolution. It's a bit hilarious when you really look at it. When you look at the green revolution that was pushed in Asia and in Latin America, why it actually failed. The solution to Africa's food problems are not large-scale irrigation schemes. When you look at the research, the ecological effects of large-scale irrigation schemes do not work. What we need is small-scale irrigation schemes managed by communities and by farmers, not the kind of large-scale irrigation schemes that we can see, for example, in Kenya, where you have problems of land tenure, land security comes into place. When you have, when we talk about 500,000 acres of land being put for only one crop, that's export-led agricultural development. That is not the solution to our problems. The same thing can be witnessed in Ethiopia. The same thing is being witnessed in terms of the investment frameworks being pushed through the G8 New Alliance, Food Security and Nutrition, the World Bank benchmarking the business of agriculture. It goes back to what model of agriculture do we have? That's actually the core of the problem. So when you have food problems, you don't push for 1 million acres, especially considering that 80% of the food that we consume in Africa, especially sub-Saharan Africa, is produced by smallholder farmers and family farmers. That is where the investment is supposed to be. Then just going to CAADP very quickly, the fact that the failures of CAADP, technical and political, but really goes back to political, lack of goodwill from African governments, and then also going back to what exactly is the role of CAADP. CAADP is pushing a green revolution, and by a green revolution we're talking about high input agriculture where governments are focusing on subsidies for fertilizers, where they're talking about hybrid seeds instead of working with indigenous seed varieties which have been proven to be better at withstanding the effects of yields and yes, and then of course climate change, which Africa is. We're basically at the center of it.
Essentially ground zero.
Exactly.
Right. Unfortunately, we have to leave it there for the time being. But thank you for your time this evening. Appreciate it. That's Ruth Nyambura. She's a communications and advocacy coordinator at the Africa Biodiversity Network, here with us in studio. Quick run through the commodity prices here for you. Of course, the main thing with regard to commodity prices today, especially with regard to oil, is that surprise rate cut that came out of the ECB that took the wind out of the sails of oil prices, cut them a bit in trading earlier today. Whether or not we might see that information being digested and a bit more support coming through for crude futures tomorrow is another story altogether. We'll keep a very close eye on that for you on Global Business. We're still on agriculture when you come back, specifically cat farmers in Kenya's highlands. They're under quite a bit of pressure now that one of their biggest markets has been slammed shut to them. Welcome back to the programme. Cat producers in Kenya are hurting from the ban of the stimulant in the UK. The prohibition has jolted the cat market, creating a fairly large supply glut and pushing down prices. On Grassroots tonight, we focus on the changing times and fortunes of cat farmers in the highlands of Kenya, as one of their biggest sources of income faces a major threat.
Joseph Mbiti grows cat on a 1-acre plot of land adjacent to his house in Meru in central Kenya. Chewing cat, or Mira as it's popularly known here, is a social custom dating back thousands of years. And thousands of farmers like Joseph depend on the stimulant for their livelihood. Tons of cat are exported from Kenya every day, but a recent ban in the UK, one of the country's biggest markets, has caused concern amongst farmers in Kenya. Joseph says he is making significant losses. He used to earn about $5,000 a month, but now makes just about $2,000 monthly.
I am a farmer and I depend on Mira for my livelihood. Since the ban in the UK happened, I haven't been able to pay our children's school fee. I don't know what I'm going to do. Even now, there's a balance remaining which I haven't paid.
Joseph used to employ about 30 people before the UK ban, but now can only afford about 15 laborers. The Miraa farms help provide jobs for many here. Poverty and unemployment are rife and farm workers fear they may lose their jobs.
Miraa helps me educate my children and provide food for my family. I depend on it. That is why I am not involved in crime.
Not far from Joseph's farm is Maua town. Women and other traders package the cat into bundles and sell them to wholesalers. Drivers earn an average $200 a trip transporting the leaves to Kenya's capital, Nairobi.
We used to take 30 pickups filled with Miraa to Nairobi, but now we only have 5 pickups, meaning more than 20 drivers are jobless and many of the pickups are now just parked here.
Before the ban in the UK, Felix Kimathi, a cat trader, used to sell a kilogram of cat for about $16. Increased local suppliers have more than halved the price, with a kilogram going for about $6 now. The cheaper prices have meant more local buyers, but Felix say many local players are still making losses. A kilogram of cat in the UK would cost about $30.
Many young men who used to package Miraa in Meru and at the airport are now jobless. The price of Miraa has gone down drastically because all the Miraa that was going to Britain is now sold locally. Farmers are now experiencing huge losses.
Supporters of the prohibition say it will prevent Britain from becoming a hub for the illegal trade in cat to countries where it has been banned. They also cite evidence that cat has been linked to low attainment and family breakdowns. For now, Joseph and the workers in his farm remain optimistic that things will turn around and soon. Peter Kaba, CCTV.
Quick run through the currencies here for you. We'll recall, of course, yesterday that the Kenyan Central Bank decided to hold its base lending rate at 8.5%. Today, the Kenyan shilling was little changed against American dollar, about 88.65, 88.60 in trading after that decision. It did post gains against the euro. That, of course, is a ripple effect of the decisions made by the ECB. But its biggest losses today came against the South African rand. Now, just before we go, here's a preview of what we're working on for tomorrow's show. Porsche opened its, or essentially set foot and planted its flag very firmly in Kenya today. Jaguar also has a statement of intent to be looking at the luxury Kenyan car market in a lot more detail. A hell of a lot of screaming V6 sounds tomorrow. All that and more will be coming up, but that's it for this edition of Global Business. Send your feedback on the program to globalbusinessafrica@cctv.com, wherever you are online, Facebook and Twitter. So we stay in touch over there, but thank you so much for watching. See you in 23 hours. I'm Ramanyan.